All right, let me get started here. I was going to do a video explaining differences between debit spread, credit spread, and the calendar spreads I've been doing, or the diagonals, depending on which strikes you're doing. So I picked Walmart here to show you an example on. Walmart's kind of a slow mover usually, but I'm going to get into a few different strikes here. I'm going to use this as a basis. I'm not saying this is a legitimate trade I'm looking at. I'm just using this to use an example. We'll say you want Walmart to get up to around 98. That's your hopes is going to hit up to 98. And that's possible. You got the 50-day and the 200-day moving average here, but it's kind of entering a squeeze here too. So in between the Bollinger Bands is kind of coming in close. So we'll see what happens with that. But I kind of think it'll bounce down here. I have an alert set right there too. So oh, excuse me. All right, so where am I going here? There we go. Okay, so we're assuming you want Walmart to get to $98 by October 12th. Let me see. I'm just making up numbers here. Let's see if that's possible. So October 12th, the implied move's 318. Yeah, that's actually all right. That's actually exactly 98. So all right, I just kind of randomly picked that number, but there we go. Okay, so let's start with this then. So I'm going to do a vertical debit spread first and show you kind of where we're at here with that. So this vertical debit spread, this is the one I've got highlighted right here right now. Okay, you're buying the 97 call. You're going to sell the 98 call. Okay. Your max profit, well, I'm just going to assume this is all the expiration October 12th. Max profit on $24 trade is going to be $76 if it's over 98 on October 12th, basically. If you go sooner than that, it's not quite as much. Your return is not going to be as much there. That changes quickly there, the last day of expiration. So, all right, so that is 24 debit. $76 potential return. I mean, that's a, is that 300% or something? That's a good setup for return, but your risk is obviously, if it only gets to $97, you're at 100% loss on October 12th. If it's 97 or under, that's it. You're out. Thanks for playing. Try again next time. All right, so let's do, I always forget who it was I went back and forth with on the difference between credit spreads and debit spreads, if there was really much of a difference. It's kind of the opposite of the debit spread if you do the same strikes. So it's kind of the same thing, and this is just a bid-ask spread difference, but usually these would equal, this would be 30, this would be 70 or something. But so here we go. Same thing here. So your max profit is going to be $87. Your risk is going to be 13 then. So I mean, well, and bid-ask spread, that's kind of different. So what you're doing here is you're selling a 98 put, and in case it's trading under that, you're buying a 97. So that's your max risk there. Okay. So let's see. Diagonals. Okay, so that's what I want to get to. Okay, so number two on the credit spreads are a little more confusing, so I'll try to compare it to the debit spreads. That's where you're buying one strike and selling the next one. Then you kind of got to inverse all your numbers. If you're doing puts, you got to buy the higher or sell the lower, that sort of thing. So I'm doing it on calls, just showing you for example. So we'll kind of compare this one to that's a diagonal, because my strikes, what I'm doing is I'm selling right here, sell the 98 call. And I'm going to buy the December 97.50 call. I don't know why I would do that. Let me see. I think they had 100 there. That's probably more how I'd want that. Okay, so remember on your vertical spread on October 12th, remember what happened if it's under $97. You were at max loss. You lost 24, right? So check out the difference here. So I'm selling the 98. I'm buying a 100 call for December. On October 12th, when this one here, the 98 expires, if that's at 97, you're actually at 75 profit. On the other, you're on a max loss. Because you've got this December expiration here, that one's not expired and worthless. You still are holding that one. You're just buying this one so that you can sell this October 12th against it. So you can kind of mess with the numbers a little bit here too, but so that's $1.38. And even if it's at 97, you know, you're making 75 on it. Now your percent return is not as high from doing these, and it's a slower thing because you really do need to kind of wait till expiration, because there's a purple line. See where when we're earlier, there's not as much profit. It really accelerates the last week. I've done these where they expire the same week. The problem you get into there is when it overruns your strike. You can get into losses quicker. I haven't really done short-term double diagonals. I've kind of been doing 30 days out. But then here's some other things you can mess with, like, well, and then here's your max profit on it here is in the center, around 98. Usually whatever strike you're selling, let's say it gets right up to that. Well, that it's still, it gets, you know, stock goes to $97.90. Well, this still expires worthless. You keep the credit on that, no big deal, okay? So it gets right up to 98, your profit's 111 on 138. So that's still a pretty good return, but look how much wider of a range you still got profit in. So let's say it overruns 98, you go, yeah, okay, it hit 98, it kept going to 99 or 99.50 or something. It's possible, but you still got some profit. You can get into your losses if it really overruns, but look at what your actual loss is here to lose 138, you know, way over here, so I'm like 104. That's really way outside of the range. We'll mess with just a couple other things here too. Let's see if we did a 99. See how that skews that a little bit more yet. So there's some different options there, really. So you're 155, and at 97 you're making 60. So, and this is just a one-sided diagonal. Okay, you can bring in the other side here too. I could show you that real quick. What were we? October 12th. So let's just, I'm just kind of guessing on numbers here a little bit. Let's sell the 92, and then what's that, in December we'll buy the 90. So we'll add that in there. So then we got this little shape here, and yeah, I don't really like that that set up there exactly, because that is a loss if it's in the middle here. So you kind of got to mess with your dates and your strikes and all this stuff. I like to see this tent shape kind of come up here and swoop over here to where you still have profit in the middle at expiration. So that's why it, you know, I kind of search through and I find the potential trade setups where you've got this wide range of profit anywhere in between here. So let's see, do those real quick. So dripping on. All right. What was my? Oh, hold on. Yeah, there we go. Okay. I accidentally. I don't know if you've ever done this. If you go to detach gadget and I hit delete gadget, then I got to reset up all this stuff. Really obnoxious. So here's our American Airlines double diagonal. Sold the October 5th. These yellow lines are my break evens. It just needs to be somewhere in between here on October 5th for profit. I can't really see that. So, oh yeah, that was the one I spent $9 on. So let's see. It says profit 26 to 75. Is that right? Geez Louise. I don't know what I'm looking at here. Oh, that. All right. I don't even know what I'm clicking here at this point. Right, I think it's supposed to be way over here. There we go, okay. I don't know what that was. What was my expiration? October 5th. This risk profile graph's kind of screwy here sometimes. All right, so right here's where the stock price is at. Look at this, this is beautiful. Anywhere in between there, we're just dead center. So this is your zero, this is your I don't make any money line. See what I'm saying about the tent? You gotta have this, you're gonna have this swoop in the middle. It kind of settles in between there. You keep the premium on both of the ones that you sold, but the ones that are on the outside here that you own, it's kind of sitting in between those. They haven't really, that's just a theta game right there. You're just playing the time decay when it sells in the middle. When you get to one side, you're still keeping that strike, but now one of these is actually worth more because it's closer to being in the money. So yeah, we're at what? On expiration, that's worth $30 on a $9 trade. So I'm just doing single contracts, so it's just kind of messing around learning these things still, but it's kind of neat though anyway. And that's really, that's the main thing, man. Options, if you're real serious about it and you're like, man, I got to make money for this, you might as well forget it. Just have fun with it. If you're not having fun, don't do it. Let's see, this is my AIG. Look at this thing, man. This has been in kind of a range for like 6 months or something, just bouncing up between there. That's a boring stuff, really. I wouldn't even normally trade that. I'm going, okay, I need a direction. But with this, look, profits here to here. You got the 200-day moving average coming down. I suspect this is, and actually it's looking thinner in a squeeze here too. So I suspect this thing will break to the upside here at some point. We've got some good support and stuff here. But look, I did my break even under this here even. So, and then my break even on top is kind of resistance area. More than likely it's going to be somewhere in between here, October 19th. So I've got $33 in that trade, and I like to put this stuff on the charts too. Makes it way easier if you just go to drawing and do text. Makes it way easier to kind of know what you've got open, rather than going back and forth between here and the monitor positions tab or whatever else you're using to tracking. But yeah, 33 in the trade, 44 to 80 max profit. So here's that kind of looks like that. Looking at the blue lines here, so right there, right here is kind of the sweet spot when we get up to 53.50. See how that bubble increases in the center. That's where you'll get an early fill, usually is right in there, in that area. So yeah, let's see, 33 trade, we're looking at 55 on that side, 50 it comes down to this side, 50 in between, 45 in between there. So we're kind of in the $45 range, might be 55 if it gets up in here, 50 if we're in here. That's profit, so we're going to sell that for 85 or something. What was the other ones I had? Cat. Yeah, here's one. It's this one's tough. This is where you get into your loss. When this goes outside of your break evens earlier, even as it approaches that, the amount you paid for that, I mean, you're down. It shows, oh, you're down 60, 70%, whatever. But this is good till September 28th, which is a week and a half. This actually has time to come up here, bounce off this 200-day moving average, and come back in here. Right here's the sweet spot on this one, 145. So I got 96 in the trade. Oh, God, these things. All right, let's go back here. Okay, 96 in the trade, and yeah, if we're right here. See, we're on the backside at expiration here. Yeah, great there. Okay, so right there is where our current price is at, right? So at expiration, you're still $77 profit. That's cool. All right. I really kind of want this to come back into here, bounce back down. We go to 135 profit on a $96 trade. So time decay is kind of working in your favor here on this. Disney, yeah, that's a nightmare. Still a lot of crap. Okay, so Disney, I'm kind of playing on it, bouncing in between here. I don't know what I thought. Sold shares. I've got all kinds of stuff open on Disney. I actually have sold a couple. I bought these out. Well, I just bought the 125 calls, and I've sold a couple of calls against that, just keeping the premium along the way. But then I went ahead and turned it into a double diagonal. Cost in this trade I've got is 29. Here, yeah, if you're doing that, the risk profile graph gets really screwed if you're buying and selling stuff against it, because now it's based on what originally. I don't know. It's a mess. But anyway, if it keeps moving up here, it should be more profitable. I think the current value of that was like, I want to say 85 or something, is what the value of that is now, just because I've taken my actual cost in the trade down so much here by selling a couple different calls against it. So that's another strategy too. You can just buy a long one and sell, weeklies or, every 2 or 3 weeks against it and keep that premium, which Disney has kind of trended down a little bit here too. So I've been keeping the premium along the way here. What was the other one I had? Halliburton. I think we did a trade in the official group here. We're kind of playing a bounce on that, which is kind of done. It may kind of bounce under this 200-day moving average. MACD sloping up here and everything too, but there's a good chance this will kind of stay within this range here. That 50-day coming down, it'll probably bounce off of that or stay under, because that's also going to be resistance. Oh yeah, that was a fun one I did. I got $0 in that trade. So yeah, that's a sweet deal. $0 in the trade with max profit of $20 to $50 then. And J&J, Johnson Johnson, that's another one I'm kind of at the same position with. It's been actually like right there is the perfect position to close, except it doesn't expire till September 28th. So I either have to kind of wait and it's going to come out here. It may come back down. I don't know. I'm just going to wait and see. So really, there's not that much to manage these trades though anyways on these double diagonals I've been doing. But yeah, going back to what the heck was I looking at? Walmart though too. So use this risk profile thing, mess around with this a little bit here, and check out, when you're going to do a debit spread, consider doing a calendar spread on it instead and see what you get. So this is a 99 100 calendar spread. Look at this. You've got anywhere from 95. This is your break even, 95 to 102. So let me see, 95 here. So if it just hangs out there, maybe it never gets to your 98. So on the regular vertical, it never gets to 98, you lose. The diagonal, even if it gets to 96, 97, you've still got some profit there. So that's kind of why I like those. But just let me know if you got any questions. And I think that's it for now. God, these are going to get longer, I swear. I need to keep these shorter, don't I?